Welcome to Short View Trading, it's your morning market hit for Monday 16th of May. It's around 9 AM London time. What matters today and this week for markets and swing traders? What do we need to look at to trade these markets on a 1 to 2 week time frame? And by the way, if you like these videos, please click on the subscribe button below and please share on social media. Well, what a week that was. The bears clearly have it, at least in the States. If you look at this chart of weekly performance in front of you now, you can see all key major US indices down last week, including the Dow Jones Transports down almost 3%, the NASDAQ and the S&P down 2.4%, and the SOX, the best of the bad bunch, down a mere 0.4%. And with that, we had new intraday lows on the S&P500 and the NASDAQ 100. As you can see on the chart in front of you now, this is a candlestick of the S&P500, an intraday low on Thursday at 38.55, and then of course quite a strong rally on Friday, pretty much across the board in the States. Elsewhere in the NASDAQ 100, as you can see on this chart in front of you now, the candlestick of the NASDAQ, another intraday low on Thursday as well, 11,689. Hold that number. We'll come back to that in a second. It's key. So bearishness was pretty widespread most of the week. The CPI number was a big focus on Wednesday, but it disappointed. Having said that, there were some better performances over in Europe. If you look at something like the FTSE 100, it's holding on to its 200-day moving average and much more resolute in its performance and robust in its performance year-to-date 2022. Despite that bearishness in the States and those new intraday lows, those markets are starting to reach some really key, interesting levels. A lot of market technicians out there talking about 3,800 to 3,900 as a really key level on the S&P 500. As I mentioned, we got down to 38.55 last week intraday. And then added to that, if you look at some big Fibonacci charts, and we're putting up in front of you the S&P 500, looking at a Fibonacci retracement of its whole rally from its March 2020 pandemic's lows all the way through to its highs last year. How much of that has it given back? And from a Fibonacci perspective on the S&P 500, as you see this chart in front of you now, the S&P's retraced about 30% of its gains in this pullback. In other words, it's given back 38% of those gains from the March 2020 lows through to the 2021 highs. And as you can see, that 38.2% ratio is a very key Fibonacci level and is pretty close. Indeed, the level is 38.05. As I mentioned, we got down to 38.55 on Thursday. So not too far away, starting to get to levels that are really quite important from most technicians' point of view and also from that Fibonacci point of view. Equally, if you looked at the NASDAQ, similar points could be made. A 50% retracement of all its gains post-pandemic gets it to about 11,772. And as I mentioned earlier, the NASDAQ went at and slightly below those levels last week before rallying sharply on Friday. So there's some big levels looming, and there's also some big extreme buy signals building in various models. Look, for example, at this model that we're putting up in front of you now. This is the number of stocks in the S&P 500 trading at 52-week highs, less those trading at 52-week lows. And you can see we're pretty close to a pretty major buy signal that we saw at significant lows over recent years. So that and other models which are starting to give extreme signals are really getting quite encouraging along with those key levels. But as I mentioned last week, you really want strong buy signals from across the board of indicators. And all of these indicators we update each and every day in the Daily Rag. So to see how we're playing this, to see all those models each and every day, and to read about our thoughts on these markets for 1 to 2 week swing traders, please click on the link below for a free trial of the Daily Rag, or if you're already a subscriber, it's available via the website. So what are we watching today and this week? Well, obviously the price action, those key levels I mentioned are utterly critical. What happens in terms of the financial conditions in US financial markets is key. High yield bond spreads is a key input into those financial conditions, and anything Fed governors say, or indeed other central bank governors that suggest they may just dial back their hawkishness a tiny bit, those are critical. Over and above that, in terms of macro, there's a bit of a theme out of the States in terms of a bunch of housing data over the course of this week. NAHB Home Builders Index, starts and permits and existing home sales. And then elsewhere, we've got some more inflation data in the UK and Japan, second estimate in the Eurozone, and other bits and pieces, including the retailers, some key retailers in the States reporting earnings. So that's it from us. That's your morning market hit for Monday, 16th of May. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and share them on social media would be fantastic, or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe, trade well.